one of the easiest ways to actually do it is to come to your daily time frame. Now, why are we actually using the daily time frame? You are using the daily time frame to map out our directional bias. Now, the directional bias usually it is used by the what? Institutions or market makers. Okay, those are the people who move the market. So they usually come here to day trade. So because they day trade, they make use of this daily time frame most of the time. Now, if you look at this setup, right, from here, we were bullish, right? Good. So we would have been able to catch some longs here. Now, if you look at this setup now to the downside, we are bearish. Market is going down. So we have no business buying this market. Now, one of the fundamentals of making money quickly using this particular strategy is the fact that you can get a very massive risk to reward. So now let's dive in and see how we can actually use this. So I'm just going to plot my trend line like this. We'll plot my trend line connecting most of the key points, right? Good. After I've plotted my trend line, this is not a trend line strategy, so watch it to the very end so you don't confuse yourself. After plotting my trend line like this, I want to look out for price reacting from fair value gaps. Oh yes, fair value gaps. Now you can see this one here. You can see price reacting from this fair value gap. Right? You can see price reacting from that fair value gap. Right? The fair value gap was this long, but I'm going to refine it here. Now, we can also see price reacting from this fair value gap here again, which is here. Now, price has come back into a fair value gap. Now, where is the fair value gap? Let's just let's illustrate this. Price has come into what? A fair value gap here. Can you see this? I want you to look at this very clearly. We filled the entire fair value gap. In fact, I love trading this particular setup the most because when you catch this, it's usually very, very, very profitable. All right, it's usually very profitable. We call it an inversion fair value gap. Price coming into a fair value gap and going back again with a fair value gap. So now, if we are being conservative, let's check the 4-hour time frame now and see what it looks like. You can see that price is also what? Reacting from a bigger fair value gap here. Fair value gap is key for this strategy. You see price is reacting from a bigger one. Now, once we have seen that, it is now obvious that price wants to start what? Going down, right? Because we have reacted from a fair value gap. Now, here's our major interest now. Everything happening here. So our major interest. So I'm going to knock off this. I'll just simply knock this out. Knock this out as well. So I'll come here and look for a schematic like this. Let me show you the schematic. I want to look for this schematic, right? I want to look for this schematic, this distribution schematic. So I'll come here now to my 45 minutes. I'll come here to my 45 minutes. Try to look for this exact word schematic, guys. I'll look for this. Now, look at what's going on, right? Broke above here. We left an inducement right here. And price did what? Tanked all the way to the downside. Now, where do I get my entry? I want to see my entry right here. My entry is going to be here. For those of you who are just following me, pay attention. My entry is going to be here. I want to see price break through another block that could not hold. The moment you see that price has broken through another block that could not hold, clear indication that what price wants to sell. Clear what? Indication that price wants to sell. So look at the other block that could not hold, and price went through it with fair value gaps, telling you that there was massive sell from here, from this point. So I will simply just come here, my stops somewhere above here, and then sell this market to the next swing level, which is here. And I've gotten 1 to 6. 1 to 6 risk to reward. Sharp. Amazing. 1 to 6 risk to reward. Remember, this price action is following our trend. So we're not trading against the trend. We're trading alongside our trend. Can you see this, guys? So basically, this is how to do it. It's not magic, it's not rocket science. It's just basically knowing how to position yourself in the market to get the very best out of any trade. So I'll come here, take myself from here. My price mitigates this level, or take this inducement out. I'll just simply, let's move to 15 minutes and see what I'm saying. Right? My price takes out this inducement, I'll put my entry here, put my stop somewhere around there, and then we sell all the way down. 1 to 6, 1 to 7 risk to reward is sure. It's sure because we won't go further, we won't go up further, because the real selling pressure is coming from here. Now, furthermore, it would tend to what? Plot our volume profile indicator to confirm what I'm saying. Let's say fixed volume profile. Okay, these are paid versions. They are all paid versions anyway. But if you go ahead and plot your volume profile, you will see where the major sell is coming from. It's not coming from here. It's coming from here. It's coming from this region. See where it's coming from, guys. Major sell is coming from here like this. This is where the major sell is coming from. Right? You can see how big the candles are. Impulsively, we sold. So it wasn't coming from here. It wasn't coming from here. It was coming right from this point. And that is why we are putting our stops somewhere around here. So the price mitigates here, get our entry, and sell. Now, if you actually want to get involved in the mentorship program, the link is going to be in the description of this video, as well as the pinned comment on the chat. All right, check it out, get involved, and keep making profits. This is MJ Crypto. One love to you guys.